Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Thanks for tuning in. Great to have you with us. Alex, Eva and Costa with you, Broker Daily Uncut. It is decision day today. Rate decision day at any rate.
Yep.
Sure, there's lots of other decisions going on, but rates is the one that we're all focused on. Obviously for our audience, it's key, but it's key for everyone. It's a big deal for anyone with a mortgage, anyone thinking of getting a mortgage. There's a lot going on in the housing market. There's already the fear or the stress and the strain of changing market conditions is there to be seen. We've seen auction clearance rates drop off a cliff. What's your thoughts for today?
There's a lot happening. All the major banks have said, look, it's going to go up, has to go up.
Yeah.
We know that the budget is coming up next week. The 12th? The week after?
Tuesday, Wednesday.
Very soon anyway. And that's bringing even more...
There's a lot of stress around that.
A lot of stress around that. We do have quite a lot of clients, that were on pre-approvals, looking to buy that. Like, okay, you know what? It's so close to it. I might just wait and see what's the go, because I can't settle or I can't proceed before everything happens. So I just wait and see, and then decide then if I actually keep buying in property or if I start diversifying maybe into shares or other assets.
Well, I said to you the other day, you're
one of them. Yeah,
I'm going to keep buying property, but I am. Rates go up and down. Yeah. It's a temporary moment in time, and I think every rate change is potentially a buying opportunity. But that's from an investor perspective. Not everyone is an investor. Obviously, a lot of people are buying their own property, their own home, and there's different decisions there. Policy is very, very different, and from the perspective, certainly from investors, the policy that is coming in is particularly negative towards investors at the moment. So yeah, it's very interesting times.
We've seen both. Like we actually saw at some lenders opening up doors a little bit to make it a bit easier for investors, and I think they're trying to win, I guess, some share in that space. But it's becoming harder, and I think that rate cut, which I'm guessing will happen. Sorry, rate hike.
Yeah,
I'm hoping for a cut, but it's a hike.
That'd be cool.
Will actually put a lot of people. Like if they were on edge already, that would just push them over. Even serviceability-wise, pre-approvals, most of them on variable, people don't really lock and fix rate at that time, will drop again what people can afford. So it is going to be the hike that's going to change things.
Well, continuing on from what Eva's saying, most likely got the rate hike today. And next week with the budget, there's a lot of talk around what are we doing with CGT? What are we doing with negative gearing? What are we doing around trust? And the government hasn't really said exactly what they're doing. They've said, little bits and pieces, but are not enough where you can base a decision on yet. So what are they going to do? They're going to cap it at 2 properties. Are they going to, not get rid of trust lending, but come down on trust lending and tax it more? And it's a lot of unknown at the moment, so a lot of people are holding back, just waiting to see what happens.
Yeah, it's government's got to consider everyone in the equation clearly, but are they lopsided, and are they actually going to be effective in terms of what they're trying to do to get people in the market? It's not an easy process. I know that my friend and colleague Phil Tarrant is a lot more strident than I am. Look, it's difficult for government. They're trying to do the right thing, but trying to do the right thing and doing the right thing can often be different. Different things.
Depends on the other thing is we've discussed many times before is putting the rates up. Like it's 30% of the population. So is that actually affecting enough? I don't know. So
rates.
Yeah,
I'm less concerned about rates. It's the backdrop, and we're going to know in a few weeks. But it's the backdrop of very significant potential changes in conditions for the investment market. But you mess with the investment market, it affects house prices across the board. You can't go in and start to penalise investors without there being shockwaves throughout the rest of the market. So you've got to decide. And here's the thing, right? You're only a first-time buyer until you're not a first-time buyer. Then you're an owner, and guess what?
Yep.
Everything changes.
Yep. That's
You know,
every
you can sit
single-
around and complain about the state of the property market when you feel that you can't get in. Once you are in, you don't want to see prices falling and everything disappearing. You're on a pathway where you now have managed to get on the ladder, and this is now part of your particular
Yep. The issue is the
advancement.
people that bought at 95% plus, right on the edge of what they could afford. And then we've had 2 rate hikes since.
Yeah.
Fortunately, a third one and a fourth one.
Well, the more
We're going to see more defaults, I'd say, this year.
Oh, I don't know.
Happen.
the more tax you're going to be putting on
You think so?
investors, they're just going to pass that on to the tenant. So the rental market's just going to increase because you're not going to absorb everything.
Of course not.
And then, again, going off to what you were saying before, you're trying to slow the housing market, but say a property in Haberfield, like a standing, like a single dwelling home or somewhere in the Shire or somewhere in the inner west, investors aren't buying those properties.
No.
An investor's not buying a property in Haberfield to rent out. They're not spending $3 million, $4 million to do that.
Yeah.
So you're not getting the investors to slow down housing. And then all the apartments, well, first-time buyers can buy apartments. They're well equipped. The problem isn't purchasing it. A lot of the time, the problem is actually the deposit, the stamp duty, but they'll refuse to ever admit that because the stamp duty they want. Will they reduce it? No. Should they? Probably. So there's only so much you're going to be able to do. It's
You've got a shortage of housing as well, and that's not the fault of investors.
no. Well, that's a lot of government red tape as well. There are plenty of people that want to develop. You know, there's plenty of people that want to make money, but
I
if the
think
government makes it hard for them, they're not going to do
You're
it.
also you're a housing nation. Like, you know, Australia is a nation built on real estate. Take one look at the real estate market here. Like, you know, it is glitz and glamour, even in the humblest of dwellings. And I like, you know, most people tuning in are going to be Australian. Like in England, real estate is an unglamorous business. You know, your real estate agent, the vendor shows you around the property. It smells of cabbage and whatever else, all of the horrible things that English people eat for their dinner. I can go around with my parents looking at a house and it stunk of fish and cabbage because the people had just finished their dinner and they show you around the house. It's not glamorous. Look at Australia. This is a nation built on real estate. It's in the blood here. So what are you going to do? You know, you look at the historical balance. Australians make money through real estate. Are we going to change that? Is the government going to change all that? Be careful what you're messing with.
Well, they want a piece of it because everyone does have property.
Well, they can have a piece of it. They've already got a large piece of it.
And
you can have a little bit more of it.
And we've discussed this on the podcast before, where
maybe I'm selling up
always
Phil
go
Town
after
now.
property, you know, because they just love taxing it.
Yeah. What you just said before, Costa, it's starting to show in the latest Cotality report. Really shows like where we actually have seen growth. You know, is it the region? Is it the units? What price range? And that's exactly what you said. It's where people can afford it. It's where the investors can still have the borrowing capacity for it. It's where the first-home buyers can afford it. However, if you go over like the 1 million mark, that's where the trend is downwards, especially in Melbourne and Sydney. But if you look somewhere else where everyone is fighting investors and first-home buyer, they're still growing and growing well.
We'll take a quick break here, and I'll complain on after the break. Don't
No
go anywhere.
complaints today.
We will get away from property in a second. We'll start talking about other areas of interest for brokers. We'll be back in a couple of seconds. Welcome back. Eva, Costa, Alex with you, Broker Daily Uncut. I do apologise for barging in and replacing Julian on this occasion. So you've got somebody who knows what they're talking about, and you've got me back again rambling away. But Julian will be back soon. Eva, just looking at what people can buy. So for me as an investor, I'm buying 1-bedroom apartments in Melbourne, and last week I bought a studio. I bought a studio for $200,000, 30 square meters. Like, people can afford to buy this, but guess what? First-time buyers don't want studios. They don't want 1-bedroom apartments. So you've got a real problem in terms of there is a shortage of property, but there are still properties available. And I think there's a generational, certainly in metro areas, of what people feel entitled to and what they think they should be buying, right? You know, the 1-bedders that I've been buying, some of them, have been as little as $320. And we're talking about in Brunswick. Like, this is a cool, trendy area. This is a nice area to live.
It's in a city.
Yeah. it's nice. It's not just some inner city places are maybe not as desirable. This is a nice area. It's got all the cafes, the bars. It's where people in Melbourne want to be, young people particularly. So I'm buying those for investment because people want to rent them.
Yes,
they rent so fast.
And the yield would be good, which helps for investment.
But people, there is this, government seems to not be realistic about, there is stock on the market.
It's not the stock people want. Yeah.
It's not the stock that people want. So trying to damage house prices so that people can get what they can't really afford and make it affordable seems to be a topsy-turvy way of going about it. Anyways, enough about property. I just want to move into looking at some of the solutions. So the solutions, obviously,
More property
in your area is, but also lender solutions.
Yeah, and that's getting tricky.
Yeah.
Solution. And look, we haven't seen many changes to help people to get in. Servicing is still very tight. Any rate hike is damaging that. What we're seeing is a few lenders have opened up to 95% LVR with okay rates, still higher, but okay rates. But we haven't seen any banks saying, oh, you know what, we're going to do this, or we're going to drop the assessment rate. It's 3% on top now to 2% or anything like that to really push against it. So borrowing capacity is just decreasing. But we've seen on the other end SME lending going a little bit, or I should say a lot stronger than it used to be, especially from NAB and ANZ. The latest reports show huge growth there. I don't know if you guys have numbers. No.
No.
Don't look at me.
So NAB, for example, grew business lending 5.6% in the first quarter of 26, which is huge, right?
Yeah, it is, yeah.
And they gain market share in both SME and total business lending. So it's showing that they're looking at different avenues as well to make their money, right? And not just mortgage, residential to people. They've hired last year 270 new business bankers.
Wow.
Which is huge.
That's
massive.
it is.
A huge
That's
amount.
like a department worth of people. Wow.
Yeah. It's a huge cohort of people. They've been also trying to tech NAB people, I guess, and really train them into business banking. So
it's tough. I mean, if you look at the environment, it seems to be a constant theme that, look, Phil will say we're heading for a recession. He's very firm in that belief. Look, I mean,
and some banks are going there too in the prediction.
Don't know, but it's tough. You talk to people in small business, it's tough. You look at the housing market casts a long shadow, but it affects everything. So with banks moving into, it's a big area moving into the SME space, big area of need, and great for brokers as well. It's very empowering for brokers to be looking more holistically at their customers.
Well, that's what's interesting there is also NAB, 70% of what they do in that space comes through the proprietary channel.
Yeah.
So also cutting brokers in some ways and reducing, obviously, or increasing margin.
And playing devil's advocate, is that because they're not providing the solutions to brokers, or is it because customers are choosing to go in?
Yeah, or maybe brokers are not opening
Maybe brokers aren't taking up the opportunity.
There's a lot of different. I
have never seen NAB having any negative approach to broking. So you got to be kind of careful. It may be that brokers are not providing the solutions to their customers. Correct. There's a gap in the market. And you know what? If it isn't NAB, this is a time where, you should really be looking at leaning into that particular area.
Yeah. And
there's big opportunity. And it's not about opportunities. There's a need. And where there's a need, there is an opportunity.
Yeah. ANZ as well is growing a lot in that space. 1% month on month and 2.3% year on year. So it's extending a lot.
I caught up with Barbara from CBA, did a podcast. It isn't out yet, I don't think. And that'll be out fairly soon. But they are focused also very much, in areas, maybe some of the non sort of vanilla areas of lending in CBA. So there's a definite focus across the board. Yep. From lenders, and then you've obviously got all of the specialist lenders and the non-banks that are very strong.
Yeah,
or
and
many of them
CBA is always one, even if they're not always pro brokers or not. There's a lot of love-hate relationship between CBA and the brokers. They're always like every month we would submit something to them regardless because they are solution.
But you've got to,
Solution.
again, looking back at, you've got to be, this is why you've got to be proactive with your customer base. And I'm sure there's plenty tuning in that have a very diverse offering, but there's going to be a lot that are very resi focused because, and like you guys are mainly resi investment, but there is,
so much
there reaches
more
a
there.
point where you have to look at your customer rather than, you can have your area of specialization, but having a focus on the customer and going back and staying connected with your customer and finding out what the needs of the customer are and if it's changed, because there's a lot of self-employed people in Australia, just back on the SME lending area. Yeah. There's many people in that space, 2 point something or other million.
Well, small business are the largest employers
Yes.
in the country.
Correct.
So, no, there definitely is plenty of it. And there is a lot of scope to add it as a service within the brokerage because, like you just said before, there's a need. And if that's what they want, well, you can be that go-to person to be able to get it for them. And they probably prefer to deal with a broker compared to going directly to a bank because you can provide them with much more options than just the individual banks where they're just going to sell you their product and their product only. So plenty of room.
Yeah, there's definitely diversification in products. We've also seen First Mac coming up with a caravan loan.
Yeah, caravan.
I can't think of anything
A lot of
worse than
retirees loving it.
caravanning.
Well,
I know
actually,
people, so many of my friends
just
love it.
I just laugh when I saw that, but sometimes it's like, it actually makes sense. They're expanding, they actually have better return than your basic asset loan.
Yeah, right.
Or car loan if you do a cash out. It's targeting more of the, I guess, asset rich later in life type of people that just have time.
People love it.
People love it. And post-COVID, well, that's what people did. It sort of makes sense.
Oh, it's such a big
my brother-in-law in England has dug up his whole front yard
to do a
to have it's not a caravan, one of those kind of like motorized kind of things.
Motorhomes,
he
like
bought it off
big.
one of his mates. Like he's changed his whole front yard for it. People go mad for it. Yeah, very good.
And I see a lot in my area, actually. Like everyone's got
I can't think of
the
anything
boat
worse,
and the
personally.
caravan next to it. That just always parked there. They never go anywhere.
I still think of it. I'm still stuck. Half. I've got one foot still stuck in England with rain and fog and cold. And the idea of doing anything in a caravan is the most unappealing thing imaginable. But anyway,
Look at the rain from a different window.
we'll take a quick break there, guys. Back in a couple of moments. Welcome back. Great to have you with us again. Have to say, I'm very pleased that my dog has finally gone to sleep. Because you may have heard a bit of a yip and a yap earlier, and I was thinking,
It's
oh
sleeping
God,
on
is
my
this
foot
dog
next
going to
to me.
ruin
He
the
was
whole
sleeping on
bloody
my foot as
podcast?
well. And I'm like, I
yes.
don't want to move it in case I wake him up.
Never, ever bring animals into entertainment.
Make us happy.
Just staying with lenders and looking at the advances and the so the move for the majors to get involved in the SME space. SMSF lending, still a very strong area. What is the latest in terms of lenders in that space?
So we've seen AMP, the only bank in this space, coming back.
Yeah.
I think it was late last year. I can't think. A few months ago.
Yeah, late last year.
A few months ago, they released a product that everyone was quite excited about because, it's a bank and we can have a true offset, and I guess people with very traditional view would like this. However, and we mentioned it in the podcast, it was very, I guess, traditional, very strict and hard to get in.
In terms of the lending criteria,
Yeah,
LVRs,
yeah, that's
what,
right.
what sort of policy areas were they?
There's a few things, and to this date, I have never been able to put one person there.
Yeah,
Not
right.
one. And I don't think Costa has.
I was trying to work with them during the week. He wanted to purchase 2 properties, had plenty of cash. I just couldn't get it to work.
Yeah.
So it is extremely
So
vanilla deal.
here it is,
okay.
Alex. What it comes. So you needed to have a minimum of minimum loan size of 300,000, which is okay.
Yeah.
But a lot of people in that space buy smaller.
Yeah.
Smaller. So that was one thing. 2, you needed to start with $300,000 in your SMSF.
That's quite
as
a
well.
bit.
Yeah, most people, they would start like the clients we see with 150, 200. 300 is already pushing it. Knowing that, they also required at the end, once you settle, 10% liquidity test.
Okay.
So they've changed all this. They said,
Well, that's good. So is that based on, is that from broker feedback?
Yeah, I think so.
Well, fair play
And
to
they
AMP.
realised, I think, that they're just not getting the business.
But that's good.
Yes, it's good. Yeah, I'm not saying it's bad.
No, I know you're not. But I mean, that's
They
that's
listened.
really very good.
Still quite, they went from 300 to 250 in fund
Yeah.
size, 300 minimum loan size to 200, liquidity tests from 10 to 5, which is still, most.
They're still going to have their
lenders-
risk profile, but it's good that
correct.
they've listened to their customers.
Correct. They're also doing pre-approvals now, which they didn't
Yeah, good.
before.
Gives more confidence to the clients.
And they're gonna also review their interest rate, make them lower,
Which I believe is already the lowest on the
which is a
market.
good thing.
Is that right?
Yeah.
Wow.
I'm just trying to remember what it was. But it has 6 in front.
Yeah, they're good. They're good. They're good.
They're very
They also
competitive on
didn't
rate.
like Purse on 3 too much, and they've put that back in
Yeah.
for people investing in.
You've got to feel, I mean, without going back to property, but like Perth, there's going to be a point where that's going to come off and it's going to come back. You would have to think, I don't know
slowing,
enough
it's
about the
slowing.
fundamentals of the market, but just the fact it keeps motoring, something will change and it will affect prices
big.
there. So I can understand.
Yeah. So they opened up the door to
But they're
regional-
now back and they're now looking at Perth, are they?
They are looking at Perth. So look, it doesn't make it like your easy to go SMSF lender, but definitely a lot more accessible to
It's going to suit some borrowers, right?
a lot. Yeah, that there's people there. I said, look, sorry, we can make it work there. That now I could say, look, we can probably squeeze it in.
Work with it, yeah.
But it's still, targeting.
I went with Granite on for my SMSF.
Granite
They were
is a
very
lot-
good.
Yeah,
They were
and
a
lot
little
more-
bit slow, but they came
Yeah,
good.
yeah,
And
yeah.
my broker said they've got a tendency to be a bit slow, but they don't let us down.
That's true.
Which is at the end of the day, it's the outcome that matters.
That's right.
And how many lenders? You don't have to name them all necessarily, but how many lenders are lending in the SMSF space?
You have close to 10.
I was going
10.
to say 8 to
Yeah.
10.
So you've got a reasonable choice, and with having a bank in there as well makes the proposition.
I guess the issue is they all have sort of the same products.
Yeah. Okay.
It's not very much like, if that doesn't work.
What would you
well,
like to see?
They opened up in that space, but traditionally you really, really needed your 2 years.
Audited SMSF details.
Yeah, and also 2 years contribution history. For self-employed, it's difficult.
Yeah.
And especially people that might have changed after COVID, they were PAYG, they decided to start their business. And what the issue I see at the moment is people right now can afford to contribute to the SMSF 30 grand a year. But if we show the tax return from 24, 25, which they won't, technically they can't afford to do this, but the tax return are 2 years old. So I'd like to see maybe some more of it's done the 30K this year. Look at the BAS. It's looking good. The business growing. Can we just go with that
Yep.
for self-employed? At the moment, I'm struggling with that one.
Yeah. Just a bit more out of the box thinking.
Yeah.
Because they are very, very strict when it comes to the SMSF lending, and they're not really willing to sort of go outside that box. So I think
It's highly regulated.
That's right.
area,
Yeah, I know,
though,
100%, and I
yeah.
get it. But if you've got sort of one product that is very, targeted on self-employed people,
Yeah.
I think that would be a good
Yeah,
thing
good.
because self-employed they're a bit all over the place.
All right,
And-
lenders, you heard it first here. Talk to the guys
Get
at
onto it.
Finney.
Yeah, that's it for today.
All right. Look, thanks, guys. Thanks for having me back on the show. Do appreciate it. Let's keep our eyes. It's going to be a very interesting couple of weeks.
Definitely.
Yes. Very.
Look, rates always have an impact, but I think you're just at a really interesting point of time. There's some big decisions, some brave decisions, if you will, depending on what side of politics you sit from the government. But could be some fairly big ramifications, I think.
Change history.
Yeah, absolutely.
Yeah. Depending where it goes, good.
All right, guys, thanks very much.
Thank you.
For everyone else, thanks so much for tuning in. Sorry about the dog yapping earlier in the podcast. Have a fantastic week. We'll catch you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.